Hey, Excel Edge Realty Podcast, fam. Um, we're going to do a deep dive today into something that's probably on a lot of your minds right now.
Especially if you're a first-time home buyer or, thinking about investing in property here in the Philippines.
Yeah, have you seen those headlines?
Yeah.
Is the Philippine real estate market headed for a recession?
Yeah, those are getting a lot of buzz.
Big question.
We're going to try to unpack that for you today.
What's really going on, and what does this mean for you, especially if you're, looking at maybe mid-price to high-ticket properties?
Right, exactly.
So we're going to be looking at some pretty cool research from an economist who actually
Mhm.
predicted the 2007-2008 financial crisis.
Oh, wow.
That's pretty impressive, right?
Yeah.
So we're going to dive into some hard data on what's happening with inventory, what's happening with investor behavior,
Okay.
and most importantly, give you some insights to help you navigate these uncertain times.
Yeah.
So let's get started
Sounded good.
with this economist, Fred Harrison.
Okay.
This is really interesting stuff.
Yeah.
What's the story with his real estate cycles?
Well, he basically argues that real estate markets move in these predictable cycles, kind of like a heartbeat.
Hmm.
And he says each cycle lasts about 18 years, and it goes through these 4 phases.
Yeah.
Recovery expansion, hypersupply, and then recession.
Okay, so 18 years, that's a long time.
It is a long time.
So are we talking about the Philippines? Where do we even begin to figure out where we are in this cycle?
Well, let's use a real-world example so you can understand it a bit better.
Okay, I like that.
So imagine a popular restaurant.
Okay.
When it first opens, it takes a while to build buzz, right?
Oh.
That's like the recovery phase in real estate.
Hmm.
Things are slow, prices are low, not a lot of activity.
Makes sense. And then what?
Well, then it starts to get popular.
Okay, so more people coming in.
Exactly. More people are buying, developers are building more projects, and prices are climbing steadily, and everyone's feeling optimistic.
So it's like the restaurant's got a line out the door.
Yeah, exactly. Bustling.
But things change, right?
Yeah, of course.
At some point.
That's some
Maybe the restaurant gets a bad review or, a new competitor opens up across the street.
That's right. And that's where we get into what's called the hypersupply phase. Yeah. So the restaurant built too many tables,
Oh.
expecting even more customers,
Okay.
but the demand starts to cool off.
Oh, I see.
So suddenly there are more tables than people to fill them.
Oh, so in real estate, more properties than buyers.
Exactly.
Okay, that sounds like trouble.
Yeah.
What happens next?
Well, just like that restaurant that might have to offer discounts or even close down the real estate market goes through a correction.
Okay,
That's what we call the recession phase.
recession.
Prices drop, construction slows down, and developers can face some tough choices.
Okay, I'm starting to see the big picture here.
Good.
So the question is the Philippine real estate market
Yeah.
starting to look like that restaurant with too many empty tables?
Well, there was a recent analysis of 7 major property developers in the Philippines, and this analysis is raising some eyebrows. One key indicator they looked at is called the inventory turnover ratio,
Okay,
which basically tells us how quickly developers are selling their properties.
okay. Are things moving quickly or are those properties just sitting around?
Well, here's where it gets interesting. Back in 2014, the average time it took to sell a property was about 31 months.
Okay, 31 months.
But by 2024, that number had jumped to a whopping 82 months?
82 months.
That's almost 7 years.
Wow. That is a dramatic slowdown. What's going on there?
Well, it could be a strong signal that we might be entering that hypersupply phase.
Okay.
Developers built a lot of units expecting continued high demand,
Right.
but the buyer behavior has shifted.
Okay.
And this slowdown has a ripple effect.
Hmm.
Developers aren't collecting payments as quickly, and that can put a strain on their finances.
So for someone looking to buy a property right now, could this be a good sign? I mean, maybe there's room to negotiate a better price.
That's a great question.
Yeah.
And it leads us to another important indicator called the risk premium.
Okay, risk premium.
Risk premium.
I'm intrigued. Okay, risk premium. What is that and why should I care?
So the risk premium is basically the extra return that an investor expects when they're putting their money into something that's considered risky. So imagine you're lending money to a friend.
Oh.
If it's a reliable friend with a solid track record, you might be happy with a small interest rate.
Right. But if it's that friend who's always losing their wallet,
Exactly. You'd probably want a much higher interest rate to make it worth the risk rate.
makes sense.
And the same goes for real estate. When investors perceive more risk in the market, they demand a higher risk premium.
So what's the risk premium looking like in the Philippines right now?
Well, in 2019, it was around 8%, which is fairly normal.
Okay.
But by 2024, it had jumped to a staggering 22.9%.
22.9%.
Yeah, that means investors are seeing a lot more risk in the Philippine real estate market today.
Wow, that's a huge increase. What's driving that perception of risk?
It's likely a combination of factors we've already talked about, the slowing inventory turnover, which suggests an oversupply of properties.
Right.
But there are also these broader economic trends at play. Global interest rates are
Oh,
rising,
no.
which makes borrowing more expensive for developers.
Yeah, that makes sense.
And there's this general sense of uncertainty about the global economy, which can make investors hesitant to put their money into anything perceived as risky.
Right.
You know?
So what does this all mean for someone like me, a first-time home buyer?
Sure.
Does a higher risk premium translate to lower property prices?
Potentially, yes. When investors demand a higher risk premium, it kind of puts this downward pressure on prices. They're basically saying they're not willing to pay as much for a property because they see a higher chance of losing money.
Okay, so if I'm thinking about buying a home in the Philippines, is now a good time?
Well, that's the million peso question, isn't it?
Yeah.
There's no easy answer because it really depends on your individual circumstances and your risk tolerance.
Okay.
On the one hand, a potential recession could create some buying opportunities as prices soften.
I see what you're saying.
But on the other hand, there's that uncertainty hanging over everything.
Yeah, it's like trying to time the market, which I've always heard is a bad idea.
It's definitely risky.
Yeah.
And it's important to remember that even if prices dip, other factors like interest rates and inflation could impact your overall costs.
So this is a lot to consider.
It is.
What advice would you give to someone who's just feeling overwhelmed by all this information?
I think the most important thing is to focus on your individual goals and your financial situation.
Okay.
If you're looking for a home to live in long term and you're financially secure, a potential market downturn might not be a deal breaker.
Right.
But if you're looking for a quick investment flip, you might want to be more cautious.
So knowledge is power.
Absolutely. The more you understand about these market dynamics, the better equipped you'll be to make informed decisions.
So what are some other things that potential buyers or investors should be thinking about right now?
Well, location is always key in real estate.
Right.
Even in a down market, properties in prime locations with good infrastructure and amenities tend to hold their value better.
Okay.
So do your research and focus on areas with strong long-term potential.
What about those who are already invested in Philippine real estate?
Yeah.
Should they be worried about a potential recession?
I wouldn't say worried, but definitely informed.
Okay.
Keep a close eye on market trends in your area.
Uh-huh.
Consider factors like rental yields and vacancy rates. If you're planning to sell in the near future, you might need to adjust your expectations and be prepared to negotiate.
So for both buyers and sellers, it sounds like staying informed is crucial.
It really is, and this is where working with a knowledgeable real estate professional can make a huge difference.
Okay.
Someone who understands the local market can analyze the data and help you navigate the complexities of buying or selling in a potentially shifting market.
So that's where Excel Edge Realty comes in.
Exactly. We specialize in mid-price to high-ticket properties in the Philippines, and we're dedicated to helping our clients make informed decisions based on solid research and expert insights.
This is all really helpful information.
Good.
But I'm sure some listeners are still wondering, is the Philippine real estate market headed for a full-blown recession?
That is the big question, and it's something we'll explore in more depth in the final part of this deep dive.
Okay.
We'll look at what a recession could mean for property prices, construction activity, and ultimately your real estate goals.
Sounds like we've got even more to unpack.
We do.
Stick around for the final part of this deep dive. We'll be right back after a quick.
Wait, we're not taking a break. We're diving straight into the final part of this deep dive. No need to go anywhere.
Oh, my bad. So, to continue our deep dive into the Philippine real estate market, let's talk about this R word everyone's been whispering about. Recession? Is it really on the horizon?
Oh, remember that economist we talked about, Fred Harrison, and his theory about real estate cycles? Based on his model and looking at the data we've discussed so far, some analysts believe the Philippines could be entering that recession phase within the next few years.
Okay, so let's say that happens. What does a recession actually look like in the real estate market?
Paint me a picture.
Yeah, paint us a picture.
Well, imagine a slowdown in construction.
Okay.
Developers become more cautious about launching new projects because they're not sure if there will be enough buyers.
Right.
As a result, fewer new properties come onto the market.
Okay, so less supply. What about demand?
Well, we might see a decrease in demand as well. Some people might hold off on buying because they're worried about job security or the overall economic climate. Others might see prices dropping and decide to wait and see if they fall even further.
So less supply and less demand. What does that do to property prices?
It typically leads to a decline in prices.
Hmm.
Sellers might have to lower their asking prices to attract buyers, and buyers might have more negotiating power.
Okay.
This could be good news for those who are ready to buy and have been waiting for prices to come down.
But for those who already own property, it could mean taking a hit on their investment, right?
That's a possibility, especially if they bought at the peak of the market. But it's important to remember that real estate is a long-term investment.
Right.
Even if prices decline in the short term, they tend to recover over time.
So what's the key takeaway here for people who are thinking about buying or selling property in the Philippines?
I would say this: don't panic.
Okay.
Recessions are a natural part of the economic cycle. They come and go. The Philippine economy has strong fundamentals, and the real estate market has proven to be resilient in the past.
That's reassuring.
Yeah.
But I'm sure some people are still feeling a bit nervous. What advice would you give them?
Do your research.
Go.
Understand the risks and opportunities. Don't make any rash decisions based on fear or speculation. And if you're not sure what to do, consult with a trusted real estate professional.
Excellent advice. So even if a recession does hit the Philippines, it's not necessarily all doom and gloom.
Not at all. In fact, recessions can create opportunities for savvy investors. When prices are down, there can be some great deals to be found. Think of it like a sale at your favorite store.
Oh, I like the way you think.
Yeah.
But even with a sale, you wouldn't just buy everything in the store, right?
Of course not.
You'd still be selective and focus on their items that are truly valuable.
Exactly the same principle applies to real estate during a recession. It's even more important to be discerning and focus on properties that have strong long-term potential.
So how do you identify those properties?
Right.
What should people be looking for?
We'll look for properties in desirable locations with good infrastructure, access to amenities, and a track record of price appreciation. Consider factors like rental yields and vacancy rates, which can indicate the strength of the rental market.
So even in a potential recession location still reigns supreme.
Absolutely, and that's something we at Excel Edge Realty are passionate about. We specialize in helping our clients find mid-price to high-ticket properties in prime locations that have the potential for solid long-term returns.
Okay, before we wrap up, I have one final question. We've talked a lot about the potential risks of a recession,
Yes,
but are there any potential benefits?
absolutely. Recessions can actually be a good thing for the market in the long run. They can help to correct overinflated prices, weed out weaker developers, and create a more sustainable and healthy market overall.
So it's like a reset button for the market.
Exactly.
A chance to clear out the clutter and start fresh.
I like it.
Well, this has been a fascinating and incredibly informative deep dive.
It has.
Before we go, is there anything else you'd like to add for our listeners, especially those Filipino first-time home buyers and investors?
I would just say this: don't let fear or uncertainty paralyze you. Arm yourself with knowledge. Stay informed about the market. And remember, the Philippine real estate market has a history of resilience and growth.
Excellent advice. And remember, if you're looking for expert guidance on navigating the Philippine real estate market, especially in the mid-price to high-ticket range, Excel Edge Realty is here to help you. You can find us online at www.exceledge.com/PHRS.
That's right. We'd love to connect with you and help you achieve your real estate goals.
Awesome. So,
And before you go, don't forget to click that follow button and share this episode with anyone who could benefit from this knowledge. We'll be back with more deep dives into the Philippine real estate market soon.
until next time, stay informed, stay empowered, and happy investing. Okay, so we've talked about these potential dips in the market. For our listeners who are already homeowners in the Philippines,
Yeah.
what does all this mean for them? Should they be concerned?
Well, it's understandable to be a bit concerned when you hear about a possible recession,
Right.
especially if you've,
Right.
Invested a significant amount in your property. But
Yeah.
remember, real estate is a long-term game.
Right. That's what I always tell my friends who are freaking out about short-term fluctuations.
Yeah,
But easier said than done, right?
definitely. So what are some practical things homeowners can do to navigate a potential downturn?
Well, one thing is to focus on what you can control.
So if you're thinking about selling in the next few years, it might be wise to start preparing your property now.
Okay.
Make those upgrades you've been putting off, spruce up the landscaping, and really, make your property shine.
Okay, so get ahead of the curve and make your property as attractive as possible.
Exactly.
What about for those homeowners who aren't planning to sell?
Yeah.
Any advice for them?
Well, if you're in a solid financial position and you're happy with your home, the cycle might be the best approach.
Okay.
Remember, downturns don't last forever.
True.
And the Philippine real estate market has a history of bouncing back, often stronger than before.
That's a good point. But what about those who might be feeling a bit vulnerable,
Sure.
especially if they've recently purchased a property?
Mm.
What would you say to them?
Well, this is where having a trusted financial advisor can be invaluable.
Okay.
They can help you assess your financial situation, explore options for refinancing or managing your mortgage payments, and create a plan to weather any potential storms.
So it's all about having a plan and being prepared.
Yeah,
Right.
exactly.
Okay, let's shift gears a bit and talk about those Filipinos who have been dreaming of owning a piece of paradise here in the Philippines.
Right.
Is now a good time to finally take the plunge and invest in a property?
Well, a potential recession, it might sound scary, but it can actually create opportunities for savvy investors, especially first-time home buyers.
Okay.
If prices do soften, it could be a chance to enter the market at a more favorable price point.
So it's like that saying, buy low, sell high, right?
Yeah, exactly.
But I imagine timing the market perfectly is pretty tricky,
It definitely is. Trying to time the market is a gamble.
right?
And instead of focusing on predicting the exact bottom, it's more about recognizing, when a property is a good value and aligns with your long-term goals.
Makes sense. So what are some things that potential buyers should keep in mind as they navigate this potentially shifting market?
Well, first, do your homework.
Okay.
Research different areas, look at price trends, and understand the factors that influence property values. Second, be realistic about your budget.
Okay.
Factor in potential fluctuations in interest rates and the overall cost of ownership.
And don't forget to factor in those closing costs.
Yes, absolutely. They
Yeah.
can really add up.
Yeah.
And it's also crucial to work with a reputable real estate agent, especially one who specializes in the type of property you're interested in.
All right.
They can provide valuable insights, help you negotiate a fair price, and guide you through the entire process.
So speaking of reputable real estate agents,
Yeah.
that's where Excel Edge Realty comes in.
Exactly. We specialize in mid-price to high-ticket properties in the Philippines,
Right.
and we're passionate about helping our clients achieve their real estate dreams. We understand the intricacies of the market, and we're committed to providing personalized guidance and support every step of the way.
So for our listeners who are feeling a bit overwhelmed or unsure about how to navigate the Philippine real estate market right now, reaching out to Excel Edge Realty could be a great first step.
Absolutely. We offer free consultations to help you understand your options and develop a personalized strategy that aligns with your goals.
Okay, this has been another incredibly insightful deep dive into the Philippine real estate market.
It has.
As we wrap up, is there one key takeaway you want to leave our listeners with?
I would just say this knowledge is power, especially when it comes to real estate. Stay informed. Be prepared for shifts in the market, and remember, the Philippine real estate journey, while it might have some twists and turns, is ultimately a journey worth taking.
Couldn't have said it better myself. And for those who are ready to embark on that journey or want to discuss their specific situation, head over to www.excelage.com.beverage.aehh to connect with our team at Excel Edge Realty.
Absolutely. And don't forget to hit that follow button and share this episode with anyone who could benefit from this knowledge. We'll be back with more deep dives into the Philippine real estate market soon.
Until next time, stay informed, stay empowered, and happy investing.